Hello everyone, this is Calvin Russell, CEO and founder of 850 Club Credit Consultation. Hope everyone's doing well today. Today we're going to talk about how to purchase a home in 2019. These are going to be your 6 steps, essentially your home buying checklist for 2019 to purchase a home. I did the same checklist. I do it every year actually, so I started it last year as, of course, the industry changes and people's questions change, and just, of course, a lot of different trends change as well. So I'm going to go straight into it, so I hope you guys got your pens and paper and everything ready to take some notes on this. Okay, so let's go ahead and go with number 1. The first thing that you want to do is start to check your credit scores. Okay, I'm not talking about through Credit Karma, freecreditscore.com, freecreditreport.com, and this is the first time where I usually don't necessarily use those platforms, only because lenders, 90% of lenders are going to use the MyFico.com reports. Okay, and so the MyFico.com reports, you're either going to have to get the quarterly monitoring, or you're going to have to get the monthly. It's 2 monthly plans to get. One is quarterly and then one is monthly. One is going to be $30 a month, and then the other one's going to be $40 a month. The difference between the two is that you get all of your 3 reports. You get a brand new set of reports, either quarterly or you can go monthly for $10 more. So either way is going to be up to you. Now, I don't recommend even spending that money unless your Credit Karma score is at least a 590 or 600. The reason why I say at least a 590 because that's the lowest score that I've ever seen on Credit Karma, and it just so happened to be a 620 on MyFico. Okay, so a lot of people go back and forth about, well, Credit Karma is this number, and you could be higher, you can be lower, and they're really only telling their situation based on their credit report. I've seen thousands of credit reports, so I've seen Credit Karma scores lower and higher than FICO scores, so you really can't go by that. Okay, so that's number 1, is making sure that you order your reports. Now, when you're looking at that report, the reason why you want to do that is simply because it's only 2 ways to get your mortgage score. Way number 1 is to go to a lender. Okay, you don't necessarily want to go to a lender first, in my own personal opinion, because that's going to be a hard pull. It will affect your score, not much, but less than 5 points, and just based on what I've seen in my experience. That's one route you can go. The second option that you have is, of course, pulling your reports yourself, which won't do anything to your credit report, as you can always look at your credit report for free. You won't get a hard inquiry, I should say, in order to do that. Okay, and that's the only way to get your mortgage scores. So once you see your mortgage scores, you're going to see 3 mortgage scores, one from each bureau: TransUnion, Equifax, and Experian. This is where the confusion comes in, because you want to go with your middle score. So 2 incorrect ways to try to find your middle score. Okay, one way is to take an average of the 3 scores. That is not how you do it. Okay, so let's just take that out the way. The other way that people mess up their middle score is that they look for whichever credit bureau is in the middle, right? And I forgot how MyFico does it, but I don't know what order it's in, but people just look at whatever bureau it is in the middle. That's their middle score. That's not how you do it. You want to look at all 3 scores, and whichever score is not the highest and not the lowest, which only leaves 1 more score left. So let me give you an example. If you have a 600, a 620, and a 630, what's your middle score? A 620. Okay. If you have a 612, a 613, and a 614, what's your middle score? 613. Okay. If you have a 591, a 599, and a 700, what's your middle score? Unfortunately, a 599. Okay, so, and the reason why I say unfortunately is because you can get approved with an FHA with a 580 credit score. The problem is that the rate is going to be a little bit higher. If you're okay with that, hey, that's up to you. And then with the 580, there's a little bit more red tape, and it cannot be a sloppy 580. A sloppy 580 is where there's repossessions, could be an old foreclosure back in the day, there's a bankruptcy that's there, and it's slow pays everywhere. What they like to see normally is high utilization. High utilization is actually quite normal because everyone has different types of situations, whether we just came out of the holiday season, whether an emergency happened, whether you had an investment that didn't go the way you wanted to, whether you had a big expense to pay pay for like a wedding or something like that, a major car repair. So life happens. So because of that, they will approve you for it. But again, you will have a slightly higher rate. A slightly higher rate is nothing to get worried about necessarily, because you can always refinance later down the line. Okay. But again, we'll get to that once we get to the lender portion. But that is number one. Number two, you have to find out how much you want to pay, okay? What I tell my clients to do is to download the Quicken Mortgage Loan Calculator. Now, you can use any mortgage loan calculator that you want, but this particular app is something that I use for my clients just because it has it where you can put in all the numbers. You can put in the price, you can put in the interest rate, you can put in your down payment percentage, you can put in your yearly amount of taxes, you can put in there your term, and you can also put in there HOA fees, okay? And then it's going to give you two payments. It's going to give you a payment with the PMI and without the PMI. So let's break down PMI. Now, again, I've dealt with a lot of lenders. I'm a licensed real estate agent. I know everyone has answers, but you got to make sure that you get the right information from the right people. Okay. I'm not saying don't take advice from everyone, but because there are some people that have gone through the process. But again, some real estate agents, they only go by how many homes that they've sold. Some lenders, a lot of lenders, they don't have to be trained on credit. They just know how to get someone a loan. When I worked at in the car business, a lot of guys didn't know how credit worked. They just necessarily pulled the credit report, gave it to the finance guy, picked out a car, and it was just that formula. Okay, so you have to understand how this works. That way you know how much you can actually buy. Okay, so there's two different numbers. One number is what you get a pre-approved for. That's the amount that the bank can give you for a home, but that doesn't necessarily have to be the amount that you want to pay. I have a client right now. She got pre-approved for $2,500 a month in monthly payment. Now we can talk price, and if we put a price on it based on that area, it's like about $250,000. So around that same number, around with the taxes in the areas that she's looking at. But either way, she wants to pay $1,800 a month. You guys see the difference. She has a budget. She got pre-approved for more, but she has a budget. She has a number that she wants to be at. And so because of that, she takes her $1,800, right, a month. And then when you start playing with the app that I just mentioned, then you'll be able to play around with the numbers, the taxes, the price, all that, and kind of get a feel for what area you're going to be in, how much house you can buy, what your insurance is going to be like. So you'll get a feel for those types of numbers. Okay. Now keep in mind, most people normally go into a single family home. If you're interested, you can purchase up to 4 units with the FHA loan. Now let's break down a couple things, because we got, of course, this is what the lender's going to come more into, but it helps to know what type of loan you're going to go with. Most home buyers, I think in my personal opinion, 70 to 80% of home buyers that are buy a single family home, they normally go FHA. So FHA is where you have to put down 3.5% of the purchase price. Now, if you want to go conventional, you can. You can go, they have a 20% down conventional, 10% down, 5%, and 3%. Now, the 3% and the 5% down, every lender doesn't have that. You have to have a certain type of score to get that. It has to be owner occupied. And again, those are slightly harder to get. So most conventionals are normally 10% down or 20% down. Now, if you don't have that type of liquid, or if you do have that type of liquid, it's up to you. But I recommend you still go FHA just because of the 3.5% down. Now, some people, I've seen videos on YouTube, or I've heard necessarily people say, well, FHA is the cheaper way to buy a house, or that's for people that don't meet all the qualifications. No, it's not. It's just for people that want to put down a lower down payment. It's as simple as that. It's not a cheaper way to do anything. A house is a house. You can easily pay off your house faster. You can easily refinance. You can easily go with a 15-year mortgage instead of a 30-year mortgage. These are options that you have. There's no cheaper way to do it. I mean, technically it is an easier way for people to buy a home, but that doesn't mean that you don't have any money. So I've heard of things like that. So, but again, it's up to you. If you want to use majority of your liquid cash to buy a home, that is on you. It's not that it's bad or smart or dumb or anything like that. That is on you. But if I can buy, trust me, if they had it where you can buy more than one house, that you can have more than one FHA loan, because you can only have one per social. Okay, so you may buy 5 buildings, but if you had an FHA loan, you can only have one on the building. Okay, now if you refinance out of that, I don't want to go too deep, but long story short, you can only have one FHA loan. Okay, so If you have 3.5% down, you do that. That's 3.5% of the purchase price. So if the purchase price is 100,000, you need 3,500. If the purchase price is 200,000, you need 7 grand. And then this is where the agent's going to come in at to kind of give you an idea of, seller credits and all that type of stuff. Which, by the way, I'll go into that a little bit, just a tad bit, just so you guys can get like an idea. But this is a little bit later down the line. I at least want to just get you guys prepared. Hey, am I ready to buy a house yet? Can I afford it? Is this something we should do? Are you comfortable paying rent already? Are you ready to be a homeowner? That's what you have to ask yourself. And when you're putting these numbers together in the app, you'll know for sure what you want to pay per month. Number 3, you have to find a lender, okay? Now, some people like to find an agent before they find a lender. Some people like to find the lender before they find the agent. It's really up to you. I would like to find out and see how much my buying power is before I start pulling people into my equation, okay? That's just me personally. An agent, an agent is going to be on you about buying a home. My clients will tell you I'm more laid back. Because we have so many other things that we are invested in. That doesn't mean I don't care about my clients, but it's like, hey, if you're interested in this home, I'll do my absolute best to help you through this entire process. But at the same time, I don't need this to eat. So that's what I'm saying. It's going to make a difference depending on what type of agent you're working with, because they're going to be calling you every day like, hey, you ready, you ready, you ready, you ready. And there's a difference between being professional and then being a pest, okay? So, but again, I'm easy going with my clients. It's like, hey, listen, but we don't do anything until we go with the lender first to find out what our buying power is. A lot of my clients, they want to go see a home before, they get the pre-approval. But again, you're not only necessarily wasting your time, wasting the agent's time, but even if you love the house, you can't do anything. So you don't want to waste your time. You don't want to live in an unrealistic way with this process. With our 850 School of Credit members, I'm telling you, you guys are going to love this video, because it's going to be the only video that's out there where you get a chance to go through the entire process. It's more so to just to understand and set the right expectations, okay? So that's going to be a one full hour full length video. You can watch this video with your friends, family, whomever, and make sure that that's the thing. You got to utilize your monthly membership if you are an 850 School of Credit member, okay, guys? Now, everyone in the family doesn't have to be a member. You can easily have this membership and then share these videos with your family members, and they can all watch it. Don't hold the information. That's what keeps the community down, is that when you hold information and you don't share it with other people, okay? Now, I'm not looking for everyone to share all of my stuff or share it at all, but at the same time, when you find out some good information, especially a free YouTube video, it's always great to kind of share that type of information. But either way, it's up to you. The next thing you want to do, you want to go into finding an agent, okay? Now, we've gotten asked question before, how do I find the agent? The best way to go about it is to kind of look at people that so I would start with your family, friends, your circle, your immediate circle. Has anyone bought a house or got an apartment where they had an agent through that process? Is anyone that you went to high school with, college with, someone that you would like to actually work with, right? Or a recommendation. It could be somebody at church, somebody at your job, anyone that you know that just bought a home and they like their experience with their real estate agent. Just because you bought a house or know someone that bought a house doesn't mean that they like their experience with their real estate agent. And they'll let you know if they had a good time. And that's what we recommend. And start looking into that. Or some people, they look at people on Zillow. Some people go to the local real estate agency down the street. And it may not be people that have bought a home. Someone could have sold a home and they had an agent represent them during the sale. So again, you can always ask around. You can go on Facebook, and at the search box, you can type in real estate agent. You can type in new home. Trust me, people are hashtagging this thing on their posts, and some people just became real estate agents. So now, and that's the easiest way, my personal recommendation, to find an agent. Now, another thing you can do too is, remember I said starting with the lender. Great lenders know great agents, okay? And they have programs depending on what type of areas that you're in, and that's going to be the next thing. Finding out what type of programs are in your area, okay? Not in your area that you live in now, unless you plan on moving to the area that you live in now, but you're trying to see if there are any grant programs for either your state, grant programs that either a lender has. I know our lenders have great down payment assistance programs, but you may have a lender that you want to work with. Ask them, do they have any lender-based programs? And of course, third, you want to find out if there are any area-specific based programs that you can get into. There are some areas in Chicago where they're considered less desirable neighborhoods. They're giving people $15,000 grants just to live in the neighborhood. So if you start putting a lot of homeowners in that type of neighborhood, then it starts to bring up the neighborhood. You got taxpayers, you got grass cutters, you got car washers, things of that type of stuff, things of that sort that makes, the entire community better. So you want to look out for those types of programs. Okay. So that is my list. That is my checklist to go into home ownership, at least starting the process for 2019. Again, don't forget, we have the 850 School of Credit that just came out. It's going to be a full 1-hour video on the entire process from getting your credit score all the way into the keys, and we may even go into a few tips of life after the keys. Okay, so that's something special for the 850 School of Credit members. Okay, so either way, thank you guys so much. As always, I know you guys are going to share this video because you've shared so many of our videos. We most definitely appreciate you all for that. I almost forgot to say Happy New Year to you all. Of course, things are going great at 850 Club, but we're always looking to become better and better serve our clients, our viewers, and things of that sort. And also be sure to subscribe if you haven't already, as we have nothing but great content on the way. Thank you guys so much, and have a great day.